It's Matt Simpson here from Forex.com, and I'm going to outline why I think gold could recover as we go into the end of this month. Now, gold is down around 11% this month already, and a month that is typically associated with losses. But you could argue that, in compared to other Junes throughout this century, it's a little bit extended to the downside. So we'll look at some of the price charts and the seasonality tendencies to explain why. Now, this chart might look a bit confusing, but it's just looking at how gold has performed for every month of the year, taking average returns since the year 2000. Now, we'll focus on this column here, which is, of course, June, and it tends to only close higher 40% of the time, or put another way, it closes lower 60% of the time, which makes it the lowest win rate throughout the 12 months of the year. It has a negative average return of minus 0.4% and a negative median return of minus 1.5%. Of those months, which 6% tend to be bearish, it has an average return of minus 3.5%. As I just pointed out, currently it is down around 11%, which is quite extreme. If you compare that to how it's generally performed in June over this data set, it's really only exceeded that once in June 2013, which is 11%. So if it finishes around these levels this time next week, it'll be the second most aggressive sell-off this century. On the left-hand chart, we've got the monthly chart, and it is on track for a fourth consecutive month lower. We've not seen that sequence since September 2022, so already it's getting quite extreme. So maybe as we get into the next month, maybe there's a bigger case for a bounce. Also notice that whilst prices are falling, the high to low volatility of gold is actually falling as well. So it's not a sure sign of a low, but it's showing that bearish volatility is not increasing. So you typically expect that to increase if it was a full-on bear market. Also look at the current performance of the month. It's a little bit similar to what we saw in March. And no, we didn't see a massive rally, but we did at least see a slowdown of those losses. So given we've got 4 consecutive months lower, we're down quite extreme levels already, and height of volatility is diminishing. I think we need to be a little bit cautious on just expecting continued losses at this stage. Of course, you look at the daily chart, we had this lovely swing low on June the 11th, and I did do an article online explaining similar reasons to why we're looking for a bounce. We've got that bounce. Sure, we've pulled back. We are holding above that low, and we're holding above 4,000 as well. The situation is very, very similar in that we are arguably overstretched compared to due standards. And given we've already had several weeks or several months of selling, and we're down quite aggressively already, think of month-end flows and you tend to get reversals, then it's not impossible to imagine we might get a bit of a punt. Of course, do keep an eye on the US dollar. That is in a very, very strong rally at the moment, but there is resistance overhead for the dollar index as well. So if that rally slows down, it builds on the case here for potential bounce for gold. Now, looking at market exposure, this is the weekly data on the left for the futures market of gold, and these are short bets, and they have collapsed in recent weeks. Long bets aren't exactly surging, but they are creeping higher gently, and given that it's in a downtrend, that's not bad really. Of course, 4,000 is a massive level. I think traders are quite conscious of that as well. Altogether, that is seeing net long exposure increase gently on the gold futures market. On the right-hand side here, we have risk reversals and gold prices. And what makes that interesting is that risk reversals, when they're negative, it means that puts or downside protection are in demand greater than calls, which is upside expectations. If it's increasingly negative, that's a greater demand for puts relative to calls. You could say it's a bit more bearish. Now, that's significant because while you had this dominant swing low on June the 10th, and you had quite extreme readings from the options market, whilst prices have nearly taken out this low on this chart, the options market is not as bearish as it was. There's a bit of a bullish divergence. Options traders aren't seemingly as bearish as they were just a couple of weeks ago, and you've got this massive support level on gold, which held last time, so it might as well. So put together, whilst prices hold above 4,000, I think there's a pretty decent chance we might be doing some mean reversion. Now, whether it only makes it to 4,200, 4,300, I don't know, but I'd be very careful looking at shorting around these levels. As always, hope that's useful. Wish you best of luck with your trading.